Hi guys, hope you are doing well. I will review my today's trade, and it's been almost a week since I posted a video about price action, and I want to review also what's been going on the market using, you already know, the regular trading hours chart and the regular trading hours gap. Okay, so I will start with the 7 hours chart. That is my high time frame chart for regular trading hours, and let's put the lipstick. Okay, so how you can see, I was expecting a reaction, or a reaction above the marketplace around here. This is a quarterly new quarterly opening gap of July, and we had also from here, it was here Friday. This is 21 Friday of June, 21 and 24. This is a new week opening gap, and we have here a cluster of gaps. When we have this scenario that we have this major opening gap, and we have also another new week opening gap, but is overlapping outside of this, ideally you want to have the one that is outside of the smaller one. Okay, so I will put this as a new week opening gap, but the significant draw or liquidity that I was expecting to reach was this quarterly opening. But because we have here a cluster of gaps, for me, I want to consider also that this gap that it's outside, and it's outside of this one. You can use a line if you don't have one in box. Here, this is the closing price of Friday 21, and this is the opening of Monday 24. So between these two price levels is the new week opening gap, and you also want to add the 50%, that is the consequent encroachment, and you can see that how this level is almost the same as the consequent encroachment of this quarterly opening gap. Okay. Something that I want to talk this is that if you can see that we are trading inside of this range, and if you see that the most two difficult days is when we are trading from or opening. This is something important, guys. When we are opening near the 50% of the event horizon between these 2 months. Okay, you can see how we open, we move lower, higher, and we close like this. And on this day we just open, we came back to this previous range, and we expand lower to this level. So this is I will show you how to anticipate this, but when you are trading these candles or these days, you can see this Friday and Monday. So the best trades are born when you are trading the extremes of this range. That this is this new month opening gap of August and the quarterly. So from here to here was really nice trade. I took the short, and from today's it was really also was a nice trade because we took all this sell side liquidity. We reached the event horizon between June and July, that is this, between this gap and this high, the 50%. Sorry, it's from here. You see, this is the 50%, the event horizon, and we reached that level, and now we are closing above this new month opening gap. Let's see if we want to see at least, let's see what does price tomorrow. But yes, this is something that I want to tell you because these days were small range. You can see small range, big day, small range, big day, and not a big day, but was a kind of not a difficult day to trade because we take liquidity from external candles and we reach a high time frame level. So this is the best trades when you are taking liquidity. For example, here above this previous day high, we reach the upper level of this new week opening gap and we move towards the equilibrium, this event horizon. I closed all my trade at this level, at this event horizon on this trade. And you can see on this day we didn't reach any external liquidity. We were trading just inside of this candle. So this is a very tricky day, if you want to call it like this. Okay, the best trading days is when you are reaching external liquidity from a previous candle, or you are in a trending profile. We are moving towards a high time frame level, and we are opening and we are reaching like the profiles that I told you on my previous video. For example, on this day we are reaching just the upper portion of this candle, and we look to the previous PM session range to see if we can have a stop rate or an imbalance from the previous PM session to move towards the external liquidity that is the previous candle high. And the same like this. On this day we open actually inside of this candle. We retrace to this new month opening gap, a high time frame level, and we close above the event horizon of July and August. And the next day we reach exactly to the peak, this level and this level. Okay, so but when you are trading like this with this big wick and we are closing here, you can get confused if maybe we can move higher, or maybe you can move lower. If you don't feel confident about the market direction, just don't trade that day. And also was on Monday. Okay, so now let's move on to the 15 minutes chart, and this is what I told you. This is the trade that I took about here. I was using this breaker as an inversion on lower time frames. Once I saw that we closed above the 50%, I looked for an imbalance in lower time frames, and we reached also this new week opening gap, and I took this short, took my all my position below these all lows because we reached the event horizon here. Okay, but we closed below the 2 and 2.5 standard deviations. We retraced to an area of reaccumulation that is 1 and 1.5 standard deviation, and we continue to move lower to the 4 standard deviation, and we reach this gap that it was Friday regular trading hours gap, and we closed with bodies above this level here. Okay, beautiful. And from here, this is the day I told you. This was a hard day, not hard day to trade, but it's tricky. and you can see how we reach this inversion breaker and one standard deviation to the tick, and we come back to the 50% of this regular trading hours gap, and actually then we retrace, close the gap, and that's all for that day. And the trade I took today, look, I made a mistake. I told you, but because I had this level wrong. If you see my post on X, I had this event horizon just here, below here, because I was using this level, this closing price, as the high of this new month opening gap, and the event horizon was wrong. So one friend told me that you have that level wrong, and I just make the correction. But yes, okay, so let's continue. Now today I was expecting to run a little bit lower, like 2 and 2.5 standard deviations, because the level that I told you, my event horizon was just at this, between this range, so I was expecting this, and I wanted to short and long, and you will see below this is the Monday low. We have sell side liquidity resting here, and it's very obvious that we have above this range, this is all an area of the price was ranging, buy side liquidity resting above this high, and we have this imbalance also. If you can see, we didn't reach on this shallow retracements, we didn't reach this imbalance. This was a city. Oops. Okay. So I was expecting to for this all these shorts during this day to offset shorts here and start to accumulate below this O low. So you want to buy ideally the best longs, or then not the best longs, because you are trading below the regular trading hours gap and you are trading below this O low and you are reaching the event horizon. You have standard deviation levels from this gap. You have one standard deviation level here paired with 1 and 2, 1.5 and 2 standard deviations on this day. So if we move on to the 1 minute chart, this is the business for today. Okay, so you can see I short the opening of this candle as a change in the state of delivery, CSD. Why? Because we take you can see this hollow candles is electronic trading hours. We take a kind of a buy stops, but the true reason why is because we tap exactly to the tick, to the high of the new month opening gap. So I was trusting once we close below this opening with this body, this is a change on the state of delivery. So the next candle I sold here, and I was expecting to take all my short here and look for a long between this level. This is what I was expecting. I wanted to short and long all the more, because this model is my bread and butter model for me. This is my I'm trying to master this model and take the short and the long, or or vice versa. If we are on the opposite side, I'm looking to buy and long. But in this case, I wanted both and didn't materialize because I got stopped out at break even at this candle. You can see, you see this opening here, the same. So didn't take partials. I should have to take partials. I didn't. That's it. This is what's not good. And this is the first imbalance that was presented, that ICT says is the fair value gap. This, the first imbalance during the first 30 minutes. That is the opening range on the New York AM session. And I want you to look something really important. I was studying something that ICT said about the immediate rebalance and how you can use this to measure order flow. And this is something that I saw live today and was really good, because I was looking at this between these two candles. You see how after we had with this big down candle and we closed below this all low here, if we were to continue lower, because we had an immediate rebalance of this candle, we should move lower, but we didn't. This was my first sign that the order flow was changing right here, and I should have closed the trade at this moment, but I didn't. And after that we had this busy here and didn't take that trade because it was just too fast. I didn't have time to place the limit between this chart and my other accounts. But I saw how we close above this imbalance, and now look, we had the first immediate rebalance of this price line. This is also a trade that I'm starting to. I want to master also this kind of trade. We close above this high and we retrace to this previous week, and that was inside of this imbalance. So this is the first immediate rebalance, and from this move, look how we expand aggressively. And now we are closing with displacement above the new month opening gap and the 50% of the regular trading hours gap. So now, what is this? This is a breaker. Okay, so when we have this kind of both display imbalance, a sign that ICT says that when you don't want to feel this fair value gap, at least have, like, this is an institutional order for entry drill. This is here, E of Fed, and you don't want to feel all this imbalance. So where is your safe stop loss placement for this specific trade? I use the 50%. Not always, but this is something that you should learn when you are trading. This is not like a rule, because many times I'm not seeing a breaker, maybe it's another PDRA, but the way I do this is I try to look for a different, like a cluster of PDRAs to look for to invalidate my trade idea, because I want to be really precise and I want accuracy on my trades, and I want to control risk the best. So I want to achieve that on my trading. So if you think that I'm not expecting to feel or complete retrace to close this gap, and I have the 50% of this breaker, and where is the most safe place to place a stop loss? Below this line, that is the 50% of this breaker. I have all the new month opening gap to support price here, and I have the upper portion of this breaker, and I have the institutional order flow entry reel, and I have this BC right here, and I have the opening of the 930, that is the lower level of the regular trading hours gap. So I'm not expecting to come back below this level. Yes, beautiful. And my first entry was at this when we reached this BC right here, and the second entry was this, using this as a propulsion block. I really don't care if we come back many times here, but this is my entries for today here, and look how we close, and we move aggressively, and we create another imbalance to move outside of this gap here, and we are respecting the upper portion of this regular trading hours gap, that is the 75% of this gap right here, you can see, and the bodies is respecting this BC. So where is my first target now? I'm using for Confluence my standard deviations projections, and also I'm using the previous gaps, and I want to offset my positions using the liquidity from pre-market hours. I use those elements for partial taking. Okay, so now let's put these lines here and here. Now look, this is again the 15-minute chart. We have the 50%, that is the consequent encroachment of this Friday regular trading hours gap, and this is the low, the high. So look how we are aligned. We have aligned the 50%, the consequent encroachment of this CV, with the consequent encroachment of this regular trading hours gap, and 2.5 standard deviations from today regular trading hours gap. This is a strong level, a really strong level to offset my position, because we are taking the buy side also from previous Monday PM sessions highs, and I'm trading inside of the previous candle range. I'm not expecting to reverse completely to the opposite to take here. I don't need that. Okay, so look this. I will move this right here, and do you see? This is where I'm taking partials. My first partial is when we are reaching the low of this regular trading hours gap from Friday 23, and we are aligned with this buy side liquidity from pre-market hours. So this is my first partial. I'm taking partials and taking entries all with rule-based ideas and models. I'm not just because it's a random level that I think that maybe I should take partials. No, I have my rules, and this is one of them. Okay, the next partial is when we tap into this CV, 15 minutes CV, because above here I have the buy side liquidity also from pre-market hours on overnight hours, and also I'm reaching a regular trading hours PDRA. So maybe from here I'm expecting to retrace into the gap, because this could happen and happens many times. So I'm leaving only one contract to reach where? My 2.5 standard deviation and the 50% of the regular trading hours gap here. You see? Perfect. Perfect executions, perfect partial taking, and all the logic of this model is rule based, and I'm using only regular trading hours. And the levels that I told you on the previous videos about this. New month opening gap, event horizon, and for my intraday trade and framing my positions, I use this gap. And look, this was the high of the day. We didn't move above this high. And I don't care anything about from here. This was all my trade in this day. So do you see how you really need to be aware and study this algorithmic price delivery, because this is algorithmic. You can take partials, you can accumulate more here, but my risk protocol is not that good. Like, I need to work myself in my psychology a little bit more to accumulate here. But why I don't like to accumulate here? Because I'm thinking in the power of 3 of the 10 a.m. candle also. So if you think this is the 10 a.m. opening here, I want to buy just of the macro of the 950 1010. That is this. Let's put 950 1010. Okay, so this is the macro. This is a 10 a.m. candle opening. So now we leave the 10 a.m. Opening. This is premium for me. Ideally, I want to accumulate position below the opening of the gap or at the 50%. This is fair value for me. So now, because we are leaving the gap, I don't know if we are going to retrace again to these levels, and maybe on this position I'm trading. If we reach here, I'm trading. Now I have drawdown on my entries, and because I have these both two entries, I'm just trading at I don't like that. I prefer just to hold this. If this PDRA was presented below the regular trading hours gap and below the 10 a.m. candle, with confidence I'm accumulating more positions on this imbalance, for example, if we're below this opening. Okay, so, and look, the 50% of this BC, the fifth consequent encroachment of regular trading hours gap, and 2.5 standard deviation of today projection. Nah, this is insane. This is really crazy. Sometimes I don't know. Thanks God for all this, but this is for your study. And look here. I will try to see what can I do to do something like this with the tool, because it's important to have these levels in your chart and not only here in the box. But yes, tomorrow let's see what price does, because now we have, do you see how we have a similar scenario now? I will this. Do you see how we have here one range? And now we have another range for tomorrow here. So you have here sell side liquidity, and we have here buy side liquidity. And we have here this gap, and we have here this gap. But this is important. This is a new week opening gap. If you think like the weekly candle, this is the daily candle. Sorry, because my dogs are crazy right now. I don't know why they like to bark when I'm recording my videos, because it's these dogs are crazy. I have 2 dogs and I love them. And now look, for example, this is a weekly candle, and now this is a closing price and this is the opening, so you can use this and have this in your chart. Okay. These levels are going to be important for the rest of the week if we are going to continue to move higher, if that scenario happens. Or maybe we just can take this buy side liquidity and come back to the new week opening gap and continue to move lower. Price now, it's on regular trading hours. We close on this range, and we are inside these 2 gaps. I don't know what is electronic trading hours doing. Let's see. Okay. Don't trust on this. When we run this liquidity on electronic trading hours, don't trust like price is going to support this. Believe me, when market opens, they could retrace to this level again and take the liquidity resting below this low. You want to see, this is really important, you want to see regular trading hours levels being trading during regular trading hours time intervals or time windows, whatever you want to call it. Okay, so now we are moving. I don't know what's electronic trading hours. I really believe, I don't care. When I care, or what I'm using this is just to give me an idea of what is the sentiment of the pre-market. If they are using the electronic trading hours just to accumulate longs or shorts or inducing buyers or sellers into the market, that's the only thing that I'm using electronic trading hours. And I'm not trading outside of my time windows. Okay, and now we have this is really clean. This stops right here. Look, this is just too clean for me. Maybe we can reach this, I don't know if today of this week, but this is too clean for me. But also we have this gap open. I have this color because of the standard deviations. I want to change the standard deviations colors, and we change also the gap. But yes, this is open. So let's see if we can come back lower and then take this buy side. I think that this is the most favorable. This is most likely to happen, to come back to this. I don't know. Let's see what price does tomorrow. I'm not trying to, because for me right now, I'm trading my intraday profiles and liquidity, intraday liquidity, until price is trending again. Like on this rally, I was expecting to reach this gap, and once we reach this level, I'm waiting to see where we are moving towards. Okay, but look, we have these 4 standard deviations of this gap here, or 2.5 standard deviations inside this gap, 4 standard deviation of this gap aligned with this gap also. So let's see what price is pointing. But yes, this is everything for today, guys. I hope this helps you in your trading. Okay, stay safe and have a good week.